Hey everybody, went and visited the restroom before I got on here this morning. Jason, Eric, Last Warrior, Larry, Valerie, Rob, Don, Rosalind, Rex, Steven, Janice, Dan, Brian, Donald, Arturo, welcome everybody, David, Alan, Carlene, Gabe, don't recognize your name, but welcome to the stream. Jan, Craig, Penny, Francois, Penny, haven't seen you in a while, good to see you again. Ed, Swinburne, Amy, General Rush, good to see you, sir. Jeremy, Ryan, Nikki, Leah, Maurizio, Wade, Michael, Diana, George, Aaron, Joseph, Ivan, Thrifty. Good to see everybody here once again. And welcome to the stream. Welcome to the stream. And if you want to chat with me and say, hey, good morning, or ask me any questions along the way, all you got to do, click the button over in the corner, be a subscriber on the channel. A few seconds later, you have the chat thing enabled. And that's the way it works. Got to be a subscriber. Anyway, welcome to the show. I do this every morning, 9:15. Make sure you subscribe down below, or set a reminder in your phone and click the notification, the bell thinger with the doodads to turn on notifications on YouTube. And if YouTube thinks you'll watch it, then it'll give you a notification. So anyway, looking, man, my shirt does something weird on the screen. Anyway, it's a like little blue and white. I don't know what you call it. It's like very mini plaid. I don't know. Anyway, retail sales coming in right here. Right here this morning. We were expecting a negative 0.3 and got flat. Expected a 0.1 on the core and got 0.4 right there. So that caused a little, just literally just a little bit of volatility in the market. Uh, I'm sure my daughter would be like, is that a little bit like sarcastic, a little bit, or is that and I'm not being sarcastic. It was just a little like a little flash in the market. Didn't really have much effect because kind of came in line with what was being expected. That was a little bump, and I guess they were expecting kind of a continued lull, which I mean, if you look at all the restaurants and stuff that have been announcing, I mean, the consumer looks kind of weak, right? So core retail sales and retail sales coming in a little stronger than we expect. Well, maybe things aren't deteriorating as fast as, I mean, but that, I don't know about you. That still doesn't look too great. I mean, that can definitely deteriorate from here. We look back at other periods where we had rapid deterioration. Dun, 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 dun. Then we get this bigger trend, and then oh gosh, and then we pulled it back out right there. I'm talking about this one right over here. You remember that? You see, these spikes were declining, 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 and then we got these negative spikes in here, and that didn't really resolve until right around in here. We quit getting those big negative spikes. We occasionally do still get them, but then everything was kind of hanging out up here for the most part after that, after this recovery kind of situation started. So, what does that tell us currently? Well, I'm not sure we get a lot out of the current, honestly. So we had that crazy stuff back there where everything shut down, then everything reopened, and then we had a couple of big spikes. We haven't. I mean, if you kind of look at this coming out, we've had some declines, but we've also had this kind of happening as we've stabilized coming out of the craziness that was 2020. And these are lower though. No giant spikes after COVID per se, but these spikes are declining. We could, somewhere around February, we usually get a big one. That's when we get the Christmas numbers, probably. I mean, that's kind of typically where it kind of happens. And we see that almost every year there. So we're seeing a little decline year over year. And funny enough, we didn't, that was down. one not a giant spike. That one not a giant spike. So interesting that we've gotten these spikes showing the Christmas stuff after COVID, kind of. But these are declining, showing there's weakness a brewing. Weakness a brewing. And I'm not sure I would expect a giant. I mean, we could go negative here. That would be, yeah. So the trend definitely appears to be heading down right now. Be a warning. Something coming up out here. What do we got? I don't know. I don't know what's gonna happen exactly. Something's gonna happen. Anyway, on the road again. Wrongamer should be back here in about 10 hours. Anyway, Wrongamer and the boys. And let's see. Moving on. Oh, I should do the disclaimer before we get going too far. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may never get it right again. That's what that says. So this presentation is intended to be informational, educational, fun, entertaining. It is not a recommendation to be buying or selling anything. All right, no financial instruments like no stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, and nothing from people like me. Don't buy stuff from gurus unless you trust them. And if you desire personal financial advice, right here, you need somebody to tell you what to do. Hire and consult a financial advisor, but remember, you need to be able to trust that guy too, or girl. And they had to pass a law. These people would give you financial advice without taking your personal best interest in mind, and they had to pass a law to mandate them to do that. So I'm leery of these people too. So be careful out there. Be careful out there. Anyway, looking at what's moving, what's popping, what's dropping. Going into it. S&P having a rough time trying to actually break out here. Rejected the breakout so far. Can we get continuation? It's a big question. Now, I was saying a minute ago that we got some volatility. Now, see, here's the volatility. Look at that. See this candle right here? That was the 830 retail sales number. And it just readjusted. Cool. That was the volatility. And the market will open here in about 5 minutes. So the market closed yesterday all the way over here. Overnight, we mostly kind of hung. Mostly was just kind of sideways. And then that started right there. Then we found support right at the prior low and we recovered. So now we're looking at pretty much a flat open. Maybe we go ripping a little higher here. I'll give you my bias for the day if you stick around to the end. But we closed yesterday right there. So where was the close yesterday? The close yesterday in the markets was right over, actually it was right here. So we're actually trading up just slightly. Up just slightly. That was the close. Right there. We rallied up. Just kind of set. Dipped back to retest the low. Now we're hanging out up here. And when you zoom out a little bit, we've got that resistance where we rejected yesterday. We're working on making a top. Working on making a top. So, not a lot I can say at the moment. There you go. Big croquet hammer looking thing yesterday. Guess if you go look at the candlesticks patterns, could be an evening star, which usually precedes a bigger drop. But there's no, I ran thousands of candle pattern searches on the history of S&P and NASDAQ and Russell, and guess what? It was basically a 50-50 top 50-50 toss up whether the candle patterns actually worked. So those of you that look at candle patterns, they work when they work, they don't when they don't. That's kind of the way it works, you know. I like to go with something that actually works, and that's why I look at Apollo. That's why I built Apollo, to try to give me a basis for that. And if you want to come learn more about the cool new stuff that I'm building with Apollo, well, I have a webinar coming up right after this at 10:30 a.m. where I'm going to be going through some of the new stuff that it's coming out with and giving out kind of the free trades. So I have a day trading thing, a longer term trading thing, and a really longer term trading thing. I'm all working on rolling out on this thing. Termite Trading Labs people, you're the ones who get it first and most and the best. And that's weird. It made it all a link. That's not what I wanted to do. And cool. It's gonna mess that up. Oh, love it. I love it. I love it. I love it. Let's try this a different way. One more time. And I'll post a link in the chat here. There we go. There we go. Right there. If you want to come see me at 10:30 after I'm finished with this. So anyway, NQ still inside the big red candle. Yesterday couldn't really recover, couldn't really drop. Now, the concerning thing for me on NQ, let's look at this. Show you what we did. Well, let's just clear this off a little bit. Like make it crystal clear. Just remove that. And let's turn off Apollo here. So this high right here, and I'll highlight it in a second. We're talking about this high right here. We're talking about this low right here. Oop, got it off just a little bit right there, that low. Those two. Use your 2-point tool, which is the 2-point fib tool right here, the fib retracement tool on TradingView. Quick point 1, point number 2, draw the fibs in there. The 618 level coming in right here. Right here. Now, we did what could be considered a 5-wave decline. And then there's the market opening, buy, buy, buy. Those are all the day trade strategy. Kind of funny. That hit the resistance, turned down, and we've made a 3-wave up into that high yesterday. There's another buy. That's a Schwab sell. So what does that mean right here? It means this move up, man. And that already either hit the target or the stop. And sell, and sell. OKTA hitting the targets, looks like. So we went from this to here. Move number 1. We retraced right here. Move number 2. And if you draw the fib line from that high to that high, we came up right at the 618. Perfect proportion. Uber sell. And so we run that fib. This is the 3-point tool right here. While that resistance is not in line with where we topped out right here. So it doesn't really matter. But we made this move up. We've made this move up and stopped right in that resistance. That is a 3-wave move. All right. That's corrective. So we've got a 5-wave down, a 3-wave up into this high. So at this point, what does that tell you? What does that tell you? This high is extremely important on NQ right here. Why am I not using ES or anything else at this point? Because it's not as crystal clear and as bearish as it is right now on NQ. NQ, if we stay below this high, we have a very bearish setup for going substantially lower. All right? Caution is advised. Now, how do we know when we're going down? Probably we're going to break below this 20,500 area right here where this low was. And that kind of signals that we're going on down. Now, if we break above this high, bearish warning averted, probably going on up 21,000, maybe even as high as 22,000. on the next push higher. This is just set up in a cautionary way right now, and it has me cause for concern. All right. Cause for concern. So there you go. That's NQ for you. All right. Why am I not on the daily chart? Because it's not like you don't see all this on the daily chart. Why am I on the 15-minute chart? Because I know what time frame I needed to show it. I needed to be on to see what I was going to show you. Okay. 15 minutes, not my, I'm not glued to any time frame. People get confused about that. They're like, well, what time frame do you trade? The one that shows me the pattern that I need to see, and that's the one I operate on. So I'll go all the way down to a minute. I'll go all the way up to a monthly. It really just depends on which time frame I need to see it on. And a lot of times I spend my time on the daily time frame because, well, you can just kind of see the macro of what's going on. Barely represented here. And, for NQ, that's support's way down here. And we've not been there since back here in October of 23, back when the market did the, from July right there down to October. I mean, that was like August, September, October, 3-month long correction right there. Last year, do we get deja vu and do that again right up here? Entirely possible. All right. Entirely possible that we do that again over here. The market likes to repeat things. So be careful out there. Be careful. We could start doing a correction that could last a few months. We could start doing a correction that lasts a few years. All right. We're pushing the limits here on the upside for NQ at this point, before we get a revisit of this support line. Yeah, if you want the support line, links in the description. It's like $5, or you can go watch the homepage on my YouTube channel here, and I give you the code and everything for free if you're more of a DIYer and just want it for free and don't want to sweat having to pay $5 whole bucks. Uber sell. Look at that, right up to the target. Beautiful. Let's go check something here. See what we got. CGC, from OKTA, hit the target. Beautiful. Beautiful stuff. All right, moving on. CL. Back to the daily. I thought we were going to get a revisit of the roadmap line. Came up, a 3-wave move. 1, 2, 3. Relatively clear right here on this daily chart. We don't even have to go down smaller time frames. That support right there at the roadmap line. Right here. First move down, second move up, third move down. 1, 2, 3. ABC correction. That's Elliott wave stuff. If you're not sure what the devil I'm talking about, Elliott wave theory. And you can be a wave slapper. You can go read the book or read a couple websites and think you got it. 5-wave, 3-wave. You'll start slapping 5 waves and 3 waves on everything. It took me like 4 years of practice before I really understood how the proportions play out. And this 3-wave correction, if we find support right here, probably going to turn higher. That turn higher, take us up to 90. But the lower probability path, we break down, don't respect support there, and we go cruising on down to the 60 area right here. That's the alternate potential path. So right there, 90 on the upside. And this 90 upside can lead to a much larger potential retesting 105, and then potentially running on out 150, 200 per barrel on oil. 150, possibly up to 170, possibly up to 200. Now that's a more macro, longer term, bigger picture type thing right there. All right, GC, yeah, look at this, working on that breakout. We get above that high from right there in May. That's probably the last time we get these prices until we hit this up here, 2550, possibly 2600, right up in there, that target. And the big outperformer, maybe silver here, if it gets going. And not breaking out yet. This has huge upside potential. I'm keeping my eye on that one. 35, 40, possibly the upside targets on silver in the near term, like the next couple months. Bitcoin trying super hard to break out above this downtrend. Now we broke out here, couldn't hold it, came right down to the roadmap line, made the lower low that we made back in April, came back up strong yesterday, trying super hard to break out. And on the small time frame, got to go down just a little bit, smaller time frame, I should say. We have a potential 1, 2, 1, 2, 3, probably a 4 consolidation. We need the level we have to hold above to keep this going positive is right there, 59.5. Got to hold above that to keep it on the upside. So we can retest the roadmap line, push another higher high, do that a couple times. And with the 1, 2, 1, 2, 3, 4, 3, 4, 5, 4, 5, we'll probably top out somewhere up here in this orange zone. And then the way this is looking right now, we'll probably get a bigger, deeper correction. So we'll probably, I'm thinking we're probably going to move up into this zone, possibly make a higher high, possibly just come up shy of making a higher high right in there over the coming weeks, possibly out into August or August or September. And then we'll probably get one more flash down like this. People will say it's done, it's over, forget it. And we'll find support and break out. That's what it looks like right now to me. That's what the path for Bitcoin looks like to me. Ethereum. So yesterday, what was the big alleged news that moved Bitcoin and Ethereum? It was the spot ETF, basically for Ethereum, basically saying they're going to start trading next Tuesday. So a week from today. We'll see. We'll see. Nothing's official yet. It's like Bloomberg was reporting it. That allegedly was the reason. I don't believe reasons. I mean, we held support at the roadmap line and started up. You can say the reason is the reason, but, you know, I don't believe it. Price action makes the reasons for me. And so there we go. There we go. Right there. We're working on that breakout. If we can hold it, highly likely we're going to be on a path for Ethereum to go cruising up here, 5,900, possibly 7,300. Those are my upside targets right here, 59 and 73. Could we go even higher? Absolutely. Absolutely. We could be up to the 10,000, 11,000 area right up here. Entirely possible. But let's be conservative with our targets at this point. It's where you can make big money. Remember, you know, being wrong doesn't cost you big money. Staying wrong, like if you're betting on that 10, 11,000 and you're wrong, it only comes up to 7,000, then turns back down. Don't stay wrong. All right. When the market proves you wrong, don't stay wrong. Cost you big money. Dollar working on its last ditch effort to hold that prior low. As long as we hold a higher low, still bias up to the upside, 106, 107. The Apollo algo is still long that position until we get a dollar below this prior low. Right there, the odds are still with us that we're going higher. Right there on the daily chart. So upside 106.87. We have support at the prior low, including a dollar below. A little bit more support here. And if we break on down, probably heading down here to the mid-90s. Kind of been like a broken record on that for feels like 2 years now because, well, we've set up the pattern to go down there a while ago. Long while ago, it feels like. UNH, what's actually popping and dropping today? Look at that. Nice. Potential to break on out. Targets 564, 589, possibly even 2630 up here. To me, that's really fascinating that this pullback and this pullback, the targets on them align in the same kind of, I mean, look at that. Almost 2 pennies difference right there. 589. That's probably, you know, confluence of targets. That's probably going to be one of those spots where we, if it can break on higher, it's probably going to find a little resistance there. Maybe cruise on up in this zone right up here. Not as tight a confluence, but probably have more resistance right there. FNGU getting a little pop, but things are looking a little rocky here. 623 on upside, 687 upside, but support all the way down here at 330. Careful, careful. D-Dog, Datadog, that basically set up the pattern to break on up. 143, 147, 158 possible right there. Hasn't confirmed. It got the daily close up there, rejected back down hard. Popping up today, but it's got the pattern. It just needs to do it. That's a potential 1, 2, 3, 4. That'll be a 5 up potentially. Then I'll probably retrace back to the roadmap line again and then go again. If it's going to get continuation higher. If indeed he do. Shopify. Man. Popping on a stronger consumer, but still looks like we're set up to go down to the roadmap line. Right down in here. It's this is where I would expect to find support. This is where we may find support right here. Could just make a nominal lower low right there. Watch out for that drop right there. Tesla making the poppers list, but giving it back after the open here. Dun dun dun. Having a hard time getting above that. The story is going to be on the smaller time frame here. Moving on down, moving on down. Yeah, we're probably going to go revisit this 220. There's going to be, it's probably going to be a time where this comes on up. We may do a double tap test of that line right there. Could come back right in there. That would be like on Thursday. If we do some more consolidation into next Tuesday, we could actually pop on earnings, but we may see a retest after that giant move up right there. Freaking giant move up. 1, 2, 3 so far. We need a 4, 5. We need a higher high. Then it'll probably, like, if we do the higher high before earnings, we're definitely getting a retrace. Almost definitely. I mean, it's not like guaranteed, but I'd say I'd bet on it. I'd almost bet on it, and I may bet on it. If we do get the higher high going into earnings, we may retrace back to this zone right in here. If we pop up 275, 280 before earnings, we may see this right back down to 200. That's my educated wild guess right there. EWAG, educated wild guess. You may wonder what the A stands for. Use your imagination. That's what it stands for. Educated wild guess. EWAG. Yeah. Hey, Kimberly's here. Good morning, Kimberly, my favorite subscriber. And dun 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 dun. I forgot to roll out these recycling. She's gonna be like, anyway. Yeah, Tesla was doing great till Wrongarmer comes back. What the heck? What the heck? Anyway, LABU resistance. If we can get that close above that resistance, it kind of sets the stage for 192 possibly. Now, leverage stuff does not always follow my patterns, so be careful. And on top of being leveraged, this is also a biotech. It's leveraged and biotech. It's like a double whammy on 2 of the 4 things that don't particularly follow my patterns. So be careful. I'm not saying that's going to work. It's just less likely than normal, than the regular bear. And DPST, I never bought the position yesterday, so now I'm playing catch up, and looks like we're going to go cruising right up here to the 120 area. I should have bought a position, but just didn't. Nail. Resistance there. If we can get above it, set the stage to go cruising up to 163. How high can we push the market? Keep pushing it up. TSM right here. Taiwan Semi retrace right here. Oh, by the way, 5 p.m. tonight, I do requests. So if you've always wondered, you're like, man, I got charts that I really want JT to review for me, or tickers, or whatever it is. Come to 5 p.m. Eastern today, my one day of the week, Tuesday, 30 minutes of awesome, is the one day I do this every week. I take your request for at least 30 minutes. Lately, it's been like an hour and a half. I've been hanging out, doing charts until everybody's charted out. And so put a reminder in your phone, come hang out with us. So IBM right here, and maybe Ronger will be closer to town by then. IBM potentially going to break up higher here. We get back above. And this could be the daily close above that. That'd be the activation for the Apollo setup. The market roadmap setup, 204, 209, would be the upside target right there on IBM. Apollo is just my automated way to find market roadmap setups. So this is the market roadmap setup right there. Activation right there. You know, Apollo has some strict criteria. It's very conservative. Waits for the close above the 618. And it targets the 1.1448, which is 90% of the way to 1272. So that would be the target. And you may be like, well, on IBM, how often does this work? 73.8% of the time. When we activate here, we'll get the move to here. And it usually lasts 32 trading days on average. So it could be a little while. 32 trading days puts us out right there on average. And it's like a month and a half, roughly. Now, could it be longer? Absolutely. Could it be shorter? Absolutely. Average is an average. One, take two. The average is right in the middle. One's below average, one's above average. So that's how that works. You can bring the average up or down based on how good your two are. But, if you think about it, one out of every two drivers on the road, you got two drivers on the road, one out of every two of you, one's above average, one's below average. Now, the average between you may be high, but one of you is above the average and one of you is below the average. And I guarantee you, everybody thinks it's the other guy that's below the average. Maybe it's you. Be careful. Be careful out there driving. Be careful out there all the time trading. You may be the one that's below average. So right there, looks like we're probably going to come down to the roadmap line on ITRI. That's my personal GC strategy right there, showing a potential breakout higher on the 5-minute chart right here. Look at that. I love this setup right here. I've made pretty good money trading this baby. Although that candle really strong, it kind of puts the risk reward off a little bit, but that's probably going to play out pretty quickly if it hasn't played out already, because this is lagging data right there. Delayed data by 10 minutes. All right, moving on. Amazon. Man, looks like it hit a wall. Look at that. Right at 200. I mean, look at that. That's like a wall it hit right there at 200. It might be due a retrace. Even with decent retail sales numbers, this is looking like we're going to come down right there. That straight up hit a wall at 200. I would expect a retrace at this point. Back down to the roadmap line. Match. Boy, that looks pretty horrible. I don't know. That doesn't look like any kind of reversal I'm going to pay attention to. Looks pretty bad. There's... Oh, God. I don't have anything good to say about this chart at this moment. That looks bad. Now, can it do like the Carvana recovery? It could. But I don't know. So match is kind of like Carvana down here. Could it recover? Maybe. Doesn't look very promising at this moment until we start breaking above some of this consolidation. And Carvana, speaking of, we have resistance right here. Needs a retrace back down to the roadmap line. We haven't been there since November. Right there. It kind of lagged coming up off the lows. You know, the market kind of turned in October, right at the end of October. Carvana stayed flat and then started moving. But coming into this resistance, there's probably going to be some bag holder sellers. And if we can get through that zone, the next level up is probably right up here at that next little spike around 225. Yeah, see, GC already played out right there. And app. That's finding resistance. Be careful, that may roll back down. Support all the way down here at 67 area down here. URTY, that's Ultra Pro. Read that as leveraged. Ultra Pro leveraged right there. Russell 2000. So take the RTY I did up here. Like IWM. This is like leveraged IWM right here. And right up to the target. Beautiful. So that may be played out or playing out. Could go up to 60. I wouldn't bet on it necessarily. It's like hitting the 1272 area, 70% likely on average. Hitting the 1618 drops down to like 35%. So big difference between going for this target and going for this target. Silo. That's biotech and pharma right there. And it looks like a giant dumpster fire. Well, it is a dumpster fire because it's got the reverse split. Look at that nasty chart right there. Don't chase this stuff. For gosh sakes. Lose some money. I don't even like shorting these because like it can just not move for an exorbitantly long period of time or do some crazy spike and then rip your short and then continue down and you're like right, but you didn't make any money. And it's just playing the short game is incredibly difficult unless you're good at it. It's not my thing. Like I'd rather just trade longs because I can make tons of money doing that all day long. SCHW, oh, did not hit that dropped down to the roadmap line on earnings. That's why I didn't trade that one for earnings right there. Beat on the top, missed on the bottom. If you're not familiar with what I'm saying, top and bottom, these numbers commonly, the earnings are reported on top, revenue is reported on the bottom. When you see mainstream media or whatever talk about beating on the top, they beat on earnings, missing on the bottom, missed on revenue, or vice versa, missed on top, beat on the bottom. These are commonly reported this way, and that's just what that means. Beat on the top, missed on the bottom, right there. They miss both or beat both, beat on both, missed on both. So there you go. DJT, looky. We kept that resistance opening back at the roadmap line. I still suspect we're going to go visit down here around 15, 16. Don't care what anybody says. That looks strong for a breakout, but I don't know. The warrants have a whole different pattern than DJT. If you were gonna play this, I would play the warrants. I do not think I would play the underlying. The warrants have a much stronger chart pattern for going higher. That target up here, 38, possibly 41. MS. Reporting earnings, beating on the top, beating on the bottom, and just kind of hanging. Not really moving. Now that move up right there, a 1, 2, 3 wave move up, and we could stall it out here. Although, if we just match that first move up with an echo in the market, could take it right up here to 112. If it's going to be bullish, it'll go 123 probably, get a pullback, and go even higher. Big macro stuff. Rio Tinto. Ugh. Still consolidating, still hanging out in the triangle, still hanging out near 65. We're either going to break out or break down, and I don't know which way we're going to do it. This is not a reliable pattern for predicting that. It's been working on getting out of the top. I'd be careful. That's unclear. Reddit, not enough to draw my chart patterns. We did make a nominal higher high. Be careful. We're probably going to make a lower low than what we made right here at some point in the coming weeks and months. We will probably go lower than this right here. More than likely, there's a high probability that we will go lower than this. Now, that high probability may be from up here in 100, up here at 200. It's just likely at some point we come down and make a lower low than what we did right there. It's just, I mean, this one's a classic kind of example of that right here. You see the initial kind of volatility we had on the IPO. We went rocking and rolling higher, came down, back to a lower low, came up again, and then down the toilet. IPOs are typically corrective, even though we went higher. That's still, it was all corrective action. We made the lower low. Now, if Beyond is going to hang out, this is the point from where it's going to build itself out. IPOs, like 90, it's like 95, almost 99% of them, I think, typically start out in a bearish pattern. So just watch out. Reddit and DJT both likely to come on down. And BHP, get the US version, not the Australian version. And going a lot of nowhere. A lot of nowhere fast. Boring. No idea what that's going to do. And that could be a head and shoulders situation. And head and shoulders situations can play out right like this. If you're not sure what I'm talking about, head and shoulders pattern. It's a reversal pattern in the market. Shoulder, head, shoulder. Right like that. Side of the head, down from the neckline. Could be where it's headed on BHP. USO has potential to break out. Not quite there. If this is one of my preferred ways to play oil moving higher. We're not quite on the breakout yet. USO, another good, popular, one of my more favorite ways to play oil. UCO. This is leveraged. Be freaking careful. This stuff I set up back in, it was like November, I think. I put all this on a chart, put it out as my chart of the week, and we're still waiting on just the conservative target. So these can take a while to play out right here, a long while. And bigger picture bullish stuff, we could be looking for targets all the way up in the 70 area. Be rocking and rolling. That's like more than a double from current prices, but it's going to take a while. Definitely going to take a while. DLTR also on the droppers list, but finding support. Can turn and burn higher here. It did make a nominal lower low, just barely. That was enough to be done here and create a reversal. And there's Microsoft on the 1 minute charts. Oh, stopping out. Getting crushed. So, bias for the day. Bias for the day. Jump back up to the daily. Remember, this is support right here. 54.50. And in fact, I'm going to label it at this point. $54.50. As long as we're above that, the bias is up right now. If we get below that, watch out below. Now, upside targets, this zone. 5,800 up to 6,000. As long as we're above 54.50, even with a correction, if we do this in the next couple weeks, we could still go up here. Right, even if this took a little longer, even if it took out here, we could still go bamming and jamming up into this zone right there. As long as we stay above 54.50, bias is probably up for now. Maybe like, well, that's like a 200-point pullback. Yeah, be careful. We can see some increased volatility as we work toward making this high. And this high could last on out here even, who knows? All right, that's kind of what we got right now on the market. Remember, I'm going to be live again, going on Zoom here at 10:30 in about 28 minutes. If you want to come join me, right here is the link. If I said anything that was helpful, beneficial, interesting, different, whatever, give me a thumbs up. I will be live at 5 p.m. today going through your requests. So if you got requests, you're like, JT, I really want you to look at whatever it is. And I see Mason in the chat saying silver, which I already went through silver earlier. You can just pull the bar back and find it. But if you got something you want me to review, come see me at 5 p.m. That's the only time of the week I do requests. And I'll do it till everybody's done. So I'll see you later. Have a great day, everybody. Bye for now.